Hi, so I'm Richard DeMario of Foenix Partners, who you know as the new currency partners for British Marine. Just wanted to provide you with a bit of a market update, really to try and capture the main stories that traders and investors will be thinking about this Monday morning. So I suppose it makes sense to start last week, which was a big week for the pound. We've had several weeks of strong data for the UK. We've had PMIs, employment data, GDP, all very strong, but not really getting much reaction from the pound. That all changed on Thursday morning when we had the High Court ruling, which came down in favour of parliamentary involvement in the Brexit strategy. So I suppose moving us away from what we would know as a hard Brexit, if you like. The pound reacted very strongly. We saw sort of 1.5% type gains throughout the morning, and this was even ahead of the MPC meeting. So Mark Carney came out. He took, I would say, a neutral tone. So it was only a few weeks ago that we were talking about the Bank of England possibly cutting interest rates to support the economy. But they took a very neutral tone in that he suggested they would be willing to look at cutting rates if the needs arose, but also hiking interest rates if the inflation trajectory continued higher than they wanted. So overall, quite bullish though, because they upgraded growth forecasts for 2017 from 0.8% to 1.4% for the UK, and see inflation peaking at 2.83% at some point throughout the latter part of next year. So from a UK perspective, very good, very strong. Also, sterling US dollar was helped a little bit on Friday. We had non-farm payrolls, which is the glamour print, if you like, of the markets. Traders love to trade around non-farm payrolls, which as a figure tells us the number of new jobs that have been created in the month preceding. So sterling US dollar actually made highs around 125.50, and sterling euro managed to get up to 113. So both of these are sort of 1 month highs. They take us back to levels last seen just before the flash crash, as it's now been dubbed. So that's last week. Looking ahead to this week, we have a sort of monster event in the form of the US election. Typically speaking, anything like this, of this magnitude, particularly for the world's largest economy, you'd expect some significant price action. That hasn't really been the case so far, and in fact it's been very difficult to read any clear trend of how markets will respond in the case of a Trump or a Clinton victory. Perhaps that changed slightly over the weekend with the announcement that the FBI probe into Clinton's emails hadn't found anything. We actually saw the dollar strengthening, so sterling US dollar dropped off as a result. That may suggest that markets perceive Clinton to be a much safer pair of hands, and actually if she were to win, then in that case we should see the pound weaken and the dollar continue to strengthen, so sterling US dollar a little bit lower. But obviously political upsets are in our recent memory here in Brexit, in the form of the referendum just a few months ago. So it's very unknown, and also it's complicated by the fact that the election system in the US is a lot more, it's more complex because of the state-specific voting system. So on that basis, it's going to be an interesting week. We'll see a lot of price action. If there is one guarantee, it's that it's going to be very volatile.